Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm having a conversation with Stephen Arnold. Stephen is the Chief Investment Officer at Aoris Investment Management. He's just released his annual letter, which is always a cracking read, and he's going to take us through his insights. Stephen, it's great to see you again. Thanks for sitting down with Livewire.
Chris, good to see you. Happy New Year.
Thank you very much to you as well. Your letter that you published recently, your annual letter, you've talked about 2025 being one of the most unusual investing years that you've seen for a while. AI enthusiasm at one end, neglect elsewhere. I love that term, neglect elsewhere. But what was the single most important lesson for you that you learned throughout 2025?
Chris, I think the most important lesson to be applying in the current environment is patience. I think there are periods where stock prices and fundamentals sort of move hand in hand and everything feels like it makes sense, it feels intuitive and it feels comfortable. There are other periods where the fundamentals move forward and the share prices don't, or they go backwards, and then patience is required. But I think patience by itself is not enough. I think it's got to be paired with process, a disciplined process where you know what you own, why you own it, and what to look for if things aren't going according to plan. And the third thing you need is humility to recognise that maybe you're wrong and the market's right. So patience at the core, in conjunction with a good disciplined process, as well as humility, I think are the ingredients for success in the current environment.
Stephen, a follow-up if I may. I'm sure I've asked you this before, but I would like to hear you talk about it again. When the market is not doing what you think it will, like you were just talking about, is there any temptation to deviate from the process? Now, I'm sure you're about to say no, but like, is the temptation real at all? Or are you just like, no, this is our process and we're sticking to it?
I think we've got a well-defined process that's been time-tested for us over a good number of years. But at the same time, we're all asking ourselves is what we own the right stocks to own? Again, that sense of humility, and also questioning ourselves are the things outside the portfolio that maybe fit into our process more than we appreciated they did. But it's a well-defined, well-executed process, but we're always testing ourselves.
I love that fortitude. Talk to me about how a conservative and long-term strategy remains relevant in a market where there's the Magnificent Seven doing what they're doing, the short-term narrative in AI. How is it still relevant?
I think it goes back to patience. I think there are periods where the market is so myopically focused on a theme and it views everything through that one lens. If you go back to 2020, I think that lens was all about COVID disruption. Everything's going to be e-commerce. Nobody's going to go shopping again. It was a very sort of single, narrow lens. And the current environment, I think, is much the same. Primarily AI, you're a winner or you're a loser. And then around the sides, precious metals like gold and silver. But those periods of myopic focus, I think there's a sort of natural broadening out of market focus and then the perspective changes like it did after 2020. Going back to 2020, in March 2020, we bought Costco for our fund, which at the time seemed to be absolutely the wrong sort of retailer. They didn't really have an e-commerce strategy and it seemed really out of step with the current, myopic focus on sort of COVID winners. But over the next few years, it did spectacularly well for our fund as that market focus broadened out. So right now, I think we're in one of those myopic, narrow lenses of the market. Over time, it'll broaden out. And there are many good businesses today that have been neglected or maybe misperceived through that current lens. The market will recalibrate in time if we apply patience.
Let's talk about one of those businesses that has been in your portfolio for a while. So L'Oreal had a tough 2024. And again, I read in your newsletter, you've always got to make decisions with a 15 stock portfolio. Something really needs to earn its place and keep its place in there. So talk to me about the decision-making process of sticking with that one when it did have a tough 2024 and what gave you the confidence to keep holding it?
I think that framework of the myopic focus broadening out is a good one to apply to that individual business. In 2024, that myopic focus was all about China. But we also recognise that China is about 17% of L'Oreal's revenue. Important, but still a minority. But over the course of 2025, the market's perspective broadened and recognised that there are other emerging markets, Middle East, Eastern Europe, South America, that collectively are as large as China, and they're growing really well. And in the developed markets of the United States, Japan and Europe, L'Oreal's also performing well. So that focus broadened out. L'Oreal was reappraised and was one of our better performers last year.
A couple of other stocks, Accenture and RELX, they were labelled AI losers by the market. You've stuck with them. You argue that AI actually strengthens the case for them. Just talk me through that reasoning and what do you think the market is underestimating?
Well, let's start with Accenture, which is the world's largest IT outsourcing and consulting business. It helps the world's 4,000 or 5,000 largest organisations deal with change and make their businesses more efficient. Now, when you and I use AI, I can only imagine for yourself, but it feels easy. We can ask ChatGPT to do things. We don't need to be trained on it, and wow, it's amazing. And if you're so inclined, you can use coding tools to create software applications that you and I probably couldn't have done a couple of years ago. But at an enterprise level, it's very different. For the large organisations that are Accenture's clients, they employ tens of thousands of people. They probably have thousands of different software applications. They're multi-geography, multi-location, and their needs are complex. And that's where Accenture can play a really valuable role in helping them to evolve their business to make the best use of AI. In Australia, we've seen that. The large banks are engaging Accenture to modernise their IT infrastructure, ensure cyber security protection. It's a growing, really important need for businesses like banks, public sector institutions like the Australian Electoral Commission, engaging with Accenture to help those cyber security needs and then apply AI to all the data that they have. So we see AI as being not a negative, but a positive for Accenture. And I think as we go through 2026, there'll be more and more signs that that's the case.
Stephen, that's the thesis on Accenture. Tell me a little bit more about RELX.
Well, based in the UK, RELX is a provider globally of data and analytic tools to professional users across lawyers, medical practitioners, academic researchers, insurers, auto insurers in the US, and also in some parts of financial institutions like banks. Now I think at the moment the market mischaracterises RELX as an AI loser. The idea being perhaps that data is freely available off the internet, AI tools can scrape it and recreate the tools that RELX sells. We think that's not the case. In fact, RELX's data is very proprietary. Drawing on a couple of those user groups, auto insurers in the US provide RELX and only RELX with the data on every driver, every vehicle and every accident. And that database goes back many, many years. So if an individual is changing insurance company from Geico to Progressive perhaps, or State Farm, and that new insurer doesn't know their history, this database that RELX provides is an integral tool to the underwriting decision. Is this car owner a good risk? How do I price that risk? And they're the only ones that has that data. You and I, when we're using our phones to access our banks, maybe make a purchase on Amazon, behind the scenes, amazing things are happening, and RELX is responsible for that. They're analysing, is this person using their device in the way that we're familiar with? Do they look like they're typing with the left hand when they're normally right-handed? Is it a suspect device? And almost all of the large banks in the US, Australia and the UK use that tool, and only RELX provides it. So this data is very proprietary, and we think that AI, rather than being an impediment to this business, will be an amplifier. You may have heard the expression that AI without data is nothing, and RELX has highly proprietary, valuable data that's integral to the workflow of its professional users. And we're seeing this happen in a really encouraging way with lawyers. RELX is one of the major providers of content and data and workflow tools to lawyers. And over the last 12 or so months, they've been rolling out AI tools at a premium that make that data more valuable, make those processes more productive. And they're getting very strong uptake from those AI tools, and it's driving a notable acceleration in growth for the legal business and for the whole of the RELX group. So we're very excited about what AI will do for that business, and we think in time that myopic focus for the market will shift, and RELX will be recognised as being an AI beneficiary rather than a loser.
Yeah, it's almost impossible to replicate good data.
That's it.
Stephen, let's talk about another stock that you added late last year, InterContinental Hotel Group. Talk me through your thinking there.
InterContinental Hotel Group, or we'll call it IHG,
Yep.
is a large global franchisor of hotels. It doesn't own the properties, it doesn't run the hotels, but it has 20 hotel brands that it licenses to owners and operators of hotels. Now, as a franchisor, they're responsible for the reservation systems, the pricing systems, making their brands attractive, loyalty programs, and that proposition is becoming more and more attractive both to the owners and operators of hotels and the guests in the hotels. Guests like you and I, we like our loyalty programs, We also like a consistency. If I'm going to go to somewhere overseas, perhaps I haven't stayed in a hotel before, I know that one of IHG's brands, Holiday Inn perhaps, Crown Plaza, InterContinental, I know what to expect because I've stayed in those brands before. I can earn and use my loyalty points. And for those hotel owners that are putting capital behind those properties, they know that people are more likely to stay if it's a familiar brand. They don't have to pay those groups like Booking.com a big chunk of their revenue because guests are coming to them directly. And they have very modern IT infrastructure like the reservation systems that make the hotels more efficient and more profitable. So today, IHG has 4% of all the hotel rooms globally. But of all the rooms that are going to come into service in the coming years, IHG has 10%. So you can see that it's a strong market share gainer and an increasingly profitable one. And I think they'll benefit from that shift towards global franchised, recognised hotel brands for many, many years to come.
Stephen, just to follow up there, if I may, and it might crystallise the way you think about markets as opposed to some other people, but one of the themes that I've heard people talk about in the travel space is the recovery post-COVID. But everything that you just talked to me about was very stock-specific, company-specific. It seems like you almost don't care about that thematic, and it's more about the end-to-end, what the company's doing, the systems, the processes, and you can see that the upside from there. Is that a right characterisation?
Absolutely. I think of the hotel groups that do what IHG does, and there are a few others, we think it's one of the best. It has a very modern, well-invested IT infrastructure that makes their proposition more valuable to hotel owners, very strong brands, a strong loyalty program. But also because it's global, we know that the post-COVID recovery wasn't even everywhere. Yep. There are some parts of the world where that will happen in 2022, some parts of the world where it's a bit delayed. And we like that IHG is a global and balanced business, broadly across a third Europe, a third Asia, and a third in North America.
Stephen, let's round out by zooming back out a little bit. How are you feeling about the Aoris 15 stock international portfolio as we sit here today and head into, like you said, what could be a volatile 2026?
We feel very good about the quality of the businesses we own, and we feel very, very good about the valuations we own them at. Thinking about that myopic market lens, everything's an AI winner or a loser. I think naturally in time that will broaden out. Some businesses that have been perhaps incorrectly characterised as AI losers, like Accenture, will be reappraised. Others that have just been neglected as all the money flows into those AI winners will be reappraised as well. So valuation's very supportive, a great set of businesses, including the likes of L'Oreal, Accenture and IHG. And so as we look forward, feel good about what we own, the prices we own them at, and the returns that our portfolio can deliver in the coming years.
Stephen, it's always a pleasure. Thank you so much for taking us through the Aoris portfolio. Good luck in 2026.
Thank you, Chris.
If you enjoyed that interview, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.